Welcome to our pitch. We are EduLend, a peer-to-peer lending education loan disbursement marketplace. To assess the viability of our offering, we will first go through the various factors that make this venture an attractive opportunity. First of all, the education loan segment in India is a healthy growing market. Although the average ticket size has seen a 47% increase and the overall demand for the segment has gone down, this hints at an untapped market for students in need of capital and investors wanting to earn a margin on their investment. Another factor has been the P2P lending boom in India. RBI recently increased the minimum exposure limit to 50 lakh per investor. This has been a welcome move for the P2P lending industry. All the NBFC P2P lending companies which have funded various entrepreneurial ventures in India in the past year alone have created the P2P lending business as a very attractive opportunity. This positions EduLend with a unique market opportunity. And the opportunity is simple. EduLend acts as a P2P lending platform for education loans and mediates the capital and aggregates it as an instrument openly tradable in a marketplace as a cryptocurrency, tying up with the bank to authorize the loans. In order to understand EduLend's offering, let's first go through the customer's problems that EduLend attempts to resolve. The first problem that a customer faces is information asymmetry. Although education loan applications are fairly standardized processes, the lack of information about alternatives and requirements makes it difficult ordeal for Tier 2-3 demographic, which is our target demographic. The second factor is the unavailability of mortgage. Most non-priority sector loans, which are loans offered to students pursuing higher education in Tier A colleges, require a considerable amount of mortgage in order to raise funds. This makes funds inaccessible to our target demographic. A lack of financial inclusion is another problem. Although almost every citizen has an Aadhaar account, the same is not the case for financial inclusion. Not every citizen in India has a bank account. A lot of day-wage laborers have adopted the payment wallets like Paytm, PhonePe to transact daily due to demonetization and unavailability of access to bank accounts due to illiteracy or lack of documentation. Finally, there exists a lack of transparency for the investors. Once student loans are granted and the financial instrument or the loan bond is collateralized as a CDO, the investors hardly get transparent reporting of the individual instrument's performance. This lack of transparency can hinder investors' trust in the instrument and obstruct the flow of capital. Now, let's look at EduLend's value proposition. So, EduLend is a P2P lending platform which bridges the gap between students in need of capital and investors wanting to gain a margin on their capital. EduLend essentially will employ a customized Ethereum-based blockchain to facilitate the lending, with an opportunity to trade and liquidate investments for investors using a crypto coin-based marketplace already provided by players like Coinbase. Let's go through the proposed user journey. First, the student signs up on our platform. When he registers on EduLend and creates a profile, he needs to upload the relevant documentation required to profile the customer's creditworthiness. The second step is KYC and profiling. Using the secondary data available in market along with transaction history on the linked payment wallet accounts, EduLend computes a credit score and allocates a probable disbursement amount without mortgage and the interest rate available for the same. Now, the student raises the loan request. Once the student enters a request for funds based on his applicable credit limit, the platform routes and creates a debt agreement within the investors who had bid their respective amounts. As EduLend manufactures the debt obligation by partnering with the banking partner, the lenders are awarded a fraction of the instrument. This instrument is then encoded in form of crypto smart contract, which is tagged to the wallets of all the investors, and the subsequent payments will be facilitated by EduLend. Similar to the model followed by Lending Club and other players in the P2P lending business in India. Coming to the go-to-market strategy. First of all, we will employ a razor and blade marketing model to launch this product. To illustrate, we will follow the following step. The first step is the launch of a blogging and higher education planning platform. EduLend will curate and launch a peer-to-peer blogging and directed higher education planning platform. This will be the razor for the user or student. We will rely heavily on social media marketing to publicize the product. The second, introducing a free credit calculator. This product will forecast an individual student's credit score based on the document he uploads or social sign-ups and other demographic information. The credit calculator will be a great hook for the demand side and help maintain a steady flow of students on the platform. After this, we will pilot the primary product offering to select users. This will be the actual launch of the EduLend platform, wherein students will raise funding requests and investors are open to bid on each student. In order to prop up supply, this launch will be a soft launch with manual sales teams contacting and onboarding investors. We will use the success or failure of the pilot as a learning and iterate on the product. Here we will keep iterating till the investor accounts reach a critical mass and the demand supply becomes self-sufficient. We can then further move towards passive marketing to maintain supply as well as demand. The last and the final step is the launch of the crypto coin on a crypto exchange. The last and the final step, the launch of the crypto coin on a crypto exchange to introduce liquidity to the instrument. While we are working on the platform for students and investors, we also need to create an option for investors to buy and sell their stake in the debt deed. This is plausible by creating a secondary marketplace with EduLend's custom cryptocurrency backed by a binding debt contract. The primary revenue stream for EduLend will be the gas charged by the private chain for transactions. We will also charge a fixed finder's fee per initiation of debt contract. Other revenue streams include revenue from ancillary services provided by the platform. And that concludes our presentation.